JJ the CPA here. We're going to talk about why the IRS is now going to have more time to potentially audit you. It's nothing to be afraid of, because all the IRS can do is just make inquiries, and if you've done everything that you can according to what you're supposed to do following the rule book that they've put online, that if you hire somebody like myself, a CPA, that's going to help you guide you through what it is that you're reporting on your tax return, you really and truly should have no concerns. Because if you're following the rules, no matter what it is that you've done, you should be fine. Now, I know that we come down to interpretations, and that's part of the issues that come into play that make an audit scary, is that you've made interpretations, or you've hired somebody that's made interpretations that maybe they otherwise shouldn't have, because they aren't aware of what it is that they're doing for you. And that is one of the reasons to say, when you're hiring a professional, when you're hiring a CPA, make sure it is also one that if you need a heart surgery, you are hiring a heart doc. If you need a brain surgery, you're hiring a brain surgeon. Let's talk about why the IRS, though, is going to have more time for audits, and it's this. Under the new tax law, the amount of people that will be itemizing their deduction goes down by 95%. Okay, so what, JJ? Here's what that matters. Think of this. Itemized deductions. Most people, if you own a house, you're probably going to be itemizing your deductions, because you also got to deduct real estate taxes. Not only the mortgage interest, but maybe the second mortgage. You're also deducting, if you in a state that has any kind of state tax, you're deducting that. And then you're also deducting charitable contributions. And in the past, you could deduct expenses related to you as an employee, or tax prep fees, or legal fees, etc. There were a lot of different ways that you could itemize your deductions. And why would you want to do that? Because you're trying to save taxes. And most people itemize their deductions because the standard deduction was much lower. So you got one of the two. What's higher, that's what you got to take. So most of the time, for most people, 95% of Americans itemize their deductions, all the things that I just indicated. So now, if they've put the standard deduction so high that now 95% of us are no longer going to be itemizing our deductions, meaning we don't have to. The standard deduction is the higher amount. Then we're going to just take the standard deduction. Why would we itemize? We're going to take the standard deduction. And then guess what happens? All of these returns that included the itemized deductions before don't require any kind of an inquiry or an audit. So what was audited in the past? And an audit can sometimes just be a correspondence audit, meaning it's just the IRS sending a letter, asking questions and asking for receipts. So in the past, you could have a correspondence audit where they just said, can you just show us all these out-of-pocket medical expenses so that we can ensure it's a deductible? Can you show us when you paid your real estate taxes and your state taxes? Send us a receipt, copy of the check, the invoice that went along with that, or the voucher. On your mortgage interest, now they got that. They should have received a Form 1098 that tells the IRS how much you paid in mortgage interest. But what if you paid mortgage interest to a private party, and maybe that didn't get reported? So if that was the case, maybe that got questioned. If you had a second or a third mortgage, they've changed the rules on what is allowable. So there could be a question of, okay, well, you included additional mortgage interest. Is that something that you were allowed to do? Does it have to be limited? And then on charitable contributions, did you have the receipts? And if you gave over $250 in an annual basis to more than one organization, do you have a proper receipt that properly is documenting that you didn't receive any goods or services? Oh my gosh, do you hear what I'm saying? The IRS was able to question all those things if you did itemized deductions, not to mention that if you had any kind of unreimbursed business expenses, legal fees that qualified, investment fees, 401k fees, safety deposit box, trust fees, those kind of fees that came into play, the IRS could come back and say, well, we want to see receipts for that. We want to make sure that it's allowable. Okay. Now the IRS, for 95% of Americans, don't have to do that. Okay. Yeah, it's part of the simplification, but what does that lead to? What I just said at the beginning, the IRS is going to have more time to audit you, and in different areas. Now, those that are still itemizing, think of this. Now you used to be one of 100,000 million people. Now you're going to be one of 5% of that figure. Now, should you be scared? What I tell you in the beginning? No. Why should you be scared of the IRS? Do you first understand that what they're going to do is, if there's any adjustment, you owe more tax. That's it. Stop being afraid of the IRS. It's ridiculous. It's like you being worried about going to look under your bed. Well, whatever age you are, pick it. If you're watching this, I'm assuming you're an adult, you wouldn't have any issues right now walking into your pitch black bedroom and looking right underneath your bed. You'd know there'd be no monster there. But for whatever reason, when we start throwing the word IRS around, all of a sudden, and I understand that it's natural, but all of a sudden we're freaking out and we're not thinking straight. And oh my gosh, they're going to take my house, they're going to take my retirement, they're going to come after my kids, they're going to take my firstborn. How? For what? Because you took a charitable contributions? And now they come back like, oh, you didn't have the proper receipt. So, that was a $5,000 deduction. You think, oh my gosh, $5,000 deduct. Oh my gosh, it's going to break the bank. No, it's not, because a $5,000 adjustment by the IRS is going to yield whatever it is your tax rate. Most of the time, your blended tax rate is going to be 20%. It's going to be $1,000 you have to write to the IRS. Yes, there'll be some penalties and interest. It's sure as heck not going to be enough that they have to come and take your house or take your car or show up at your work and put their hand out and make sure that you're getting them paid, or they're coming to basically garnish wages. Are you kidding me? Over $1,000 plus penalties and interest, which might be a couple $100 in penalties and interest. And don't get me wrong, no one wants that. But on $1,200, do you think that there's a knock on the door? Do you think the phone rings? Do you think that they email you? They don't do that stuff. You're going to get a letter. It's going to say, you owe this, and you're going to pay it. So what I'm getting at is, yes, there's going to be more time for audit. Should you be worried? No, because if you're doing things properly, then you shouldn't have an issue. And you know what doing things properly is? Doing it, okay? Not doing something is not necessarily meaning you did it properly. What do I mean by that? Well, I'm not going to take that $5,000 charitable contribution, because if you're just telling me, JJ, that the IRS may send me an inquiry, they may send me a letter, and they're going to want a copy of that receipt. Whew, man, you know what? I'm not going to do it, because then I know I won't get questioned, and then I'm in compliance, and there you go. Okay, seriously, you have a valid charitable contribution with a receipt. It's $5,000. Is the IRS going to question it? Most likely not. You're going to probably win the lottery before you get an IRS inquiry anyways. And then if they come and they want the receipt, so send them a copy of the receipt. Big deal, right? We're not in another country where they show up with a machine gun and they put you down in the asphalt with the gun straight into your neck and say, show me that receipt. And if it's not valid, you're dead, right? That's not what's going on here. But so many people treat the IRS as though they're the big bad wolf. And the IRS has tried so hard in the last 20 years to make sure people understand they're not that. These are just human beings doing their job, making sure that you're reporting the income that you should and taking the deductions only to the extent that you're allowed to. So do what it is that you can do to reduce down your taxes. If you're working with the right people, you're working with a CPA, and you're working with somebody that's in the area that you are in. So if you're just an individual and you just have wages, then be working with somebody that knows how to do that kind of tax return, right? Just because your aunt is a bookkeeper at the local grocery store does not mean they know how to do taxes, right? An accountant is not a tax preparer. Sometimes you could even say a CPA is not a tax preparer, in the sense that you could have a CPA and they've spent their whole career doing auditing for businesses. They don't know how to prepare a tax return. If your uncle, who's been doing his own tax return since the age of 9, good job, Uncle JJ, but that's not the person that you would want to hire if all they've done is their own tax return. So when you're in a situation and you're looking at who you should hire, if you're thinking about, are you $25, you're $28, you're $34, who should I use? First of all, don't even call me. Shut off this video. Please don't subscribe to my videos, because that is not the kind of person that I want to be helping here. I want to help people not because they're getting information only for free. I want to help people that are in a situation where they want to help themselves and they're wanting to bring value to what it is that they're preparing, not as a way to just put their their head in the sand and not put themselves in a situation where they're taking care of their full tax picture. And so when you're hiring somebody and they know what they're doing, you're hiring the brain surgeon to do your brain surgery. Are you ever going to make a multiple phone call to one location to another and then call another location south of town to double check what it is that's going to be charged? Are you kidding me? No. What you're going to look at is, who's the best? Here's my issue. Who do I want to be dealing with that? That's how you should be looking at for the CPA. So more time that the IRS is going to have to audit is more reason to make sure that you are doing everything properly. How do you make sure you're doing that? Hiring people that know what it is that they're doing, and then trusting in them that they are doing that. And then, you know what else? Paying them for actually doing it, valuing them for what it is that they are doing for you. So if you, in this example, decided, well, I'm not going to take a $5,000 deduction because I'm scared and I don't want to have to ever be in a position where I have to write a $1,000 check because that'll completely bankrupt me. I'll have to turn in my kids, and I'll have to completely sell everything that I own. I'll have to go to my employer in shame and talk to my preacher and ask for forgiveness and go to confession because I took a deduction and I had to write a check for $1,000 back to the IRS and I had to pay some penalties and interest. Really? Okay, so if you're in a situation where you're going to go ahead and take this deduction, then you should feel confident about it. You shouldn't be running scared. And if you are getting an inquiry, who cares? Just provide the receipt to them. You're going to get the deduction. There's no reason that they wouldn't give it to you. And even if you have to write a check, which I'd be surprised in this very simple scenario that I gave you, is it the end of the world? No. They don't come and audit you last year. They don't come and now put you on a radar. That's not how the IRS works in any way. That's maybe how they worked back in the 50s, right? When there was a local IRS agent that maybe decided that they hated that person. Maybe, but that doesn't happen anymore. That was all back in the day where there wasn't the computerized systems to track all the information that they have now. I know that there's so many people and they look at it, it's like, well, if the IRS has more time to audit, then they're going to be in a situation where they're going to peg me and I'm going to have the red flags and now they're never going to leave me alone. Seriously, get over yourself, okay? You are not that important to the IRS. You are just simply not that important that they are going to now look at you and peg you as a tax preparer that every single year they need to come after you and look at your charitable contribution receipts, even if there is a year that there happened to be some kind of adjustment. 26 years, I've never had an IRS adjustment. You know why? Because I work with clients that are going to pay me for my time and effort. And what does my time and effort equal? Them doing things properly, documenting things properly, making sure everything in their file is ticked and tied, all T's are crossed, all I's are dotted, so that if the IRS comes and knocks, and they do, and they have, and I've met with them, we don't have any adjustments because we've done everything right. We've done it according to their playbook, and then we're ready. So be ready. All right, hey, thanks for tuning in. And I would love it if you subscribe to my YouTube channel. Click subscribe now. And then don't you ever forget, you've never met a CPA quite like me. Don't you ever forget, you've never met a CPA quite like me.